Welcome to another video in our Macro Insights series where we digest and explain macroeconomic news and data updates to help you navigate the markets from an economic outlook perspective. Today's highly anticipated RBA rate decision has been met with cheer from investors and Australians alike. The RBA has just handed down the first interest rate cut in just over 4 years after 13 rate hikes since November 2020 in a bid to combat inflation in Australia. The announcement out of the RBA today came in the form of a 25 basis point rate cut, taking the nation's cash rate to 4.1% from 4.35%, which was widely expected by the market. While certain drivers remain sticky and elevated above the RBA's target level, the rate cut will ease the cost of living pressures for all Australians. The rate cut announced today will not immediately mean eased cost of living pressures from tomorrow. The lower rate takes time to flow through to the economy, so please keep this in mind for moving forward. Let's take a look at the latest inflation drivers and economic data in Australia that the RBA would have taken into account today before making the decision to cut the rate. Australia's latest annual inflation rate was 2.4% in the December quarter, while the trimmed mean inflation reading for the same period hit 3.2%, down from 3.5% in October. Trimmed mean inflation, as the name suggests, is the average rate of inflation after trimming away the items with largest price changes, similar to core inflation in the US. This reading in Australia remains above the RBA's target 2 to 3% range, but is moving in the right direction. Services inflation remains a key factor of concern for the RBA though, with annual services inflation at 4.3% in the December quarter, with higher rents and insurances for service providers remaining the key contributor to services inflation remaining elevated. Australia's labour market is another key driver of the RBA's rate outlook. While the unemployment rate rose to 4% in December, which is a good thing, 256,000 jobs were added to the economy, showing strength in the labour market remains. Retail sales or consumer spend is another factor the RBA takes into account when assessing the rate outlook as well. In December, a month of retail, and traditionally retail spend is really elevated in this month, consumer spend actually fell 0.1% compared to a 4.6% rise in December of 2023. This is a very favourable outcome for the RBA towards the RBA's rate cut pathway, as it signals less money is being spent in the discretionary space in the economy, which helps to ease inflationary price pressures. And finally, GDP growth rate, or the rate at which the Australian economy is expanding or contracting in some cases, had a reading of 0.3% expansion in Q3 of 2024, which was a slight uptick from the prior quarter, but below economists' expectations of 0.4% expansion. The next reading is due out in March, with markets expecting a stronger uptick then in economic growth as exports continue to rise during this period, public investment continued to strengthen, and gross operating surplus is likely to ease following a 1.5% fall in Q3, driven by the mining industry's falling profits. Overall, the RBA had a tough job on the rate front this month, and the job is certainly not going to get any easier, with increased fear of inflation rebounding in the US, stronger demand outlook from China, and relatively strong retail spend remaining in Australia, driving tailwinds for that inflation reading to remain sticky. What does today's rate cut mean for your investments though? Well, the sectors in the market that will benefit the most from the rate cut are those with high growth outlook, i.e. those that have higher levels of debt to fund growth potential. Think the tech sector. Healthcare stocks will also benefit, as this sector relies on higher levels of funding to progress through the clinical trial stages towards commercialisation. And of course, the real estate sector will feel some relief today, as this sector traditionally underperforms in a high interest rate environment due to it not being able to pass on the high input costs like other sectors can. And that's all for our macroeconomic RBA rate decision update. Be sure to subscribe to our YouTube channel and become a Bell Direct member to stay up to date with the latest news, interviews, and exclusive market commentary.